NFP forecast is 88,000. But the real trade happens before the print. I've got 2 pre-NFP setups and 3 post-data strategies with exact levels. The straddle, the range scalp, and the breakout plays. Don't trade NFP without watching this first. The non-farm payrolls forecast is 88,000 new jobs, but here's what most traders get catastrophically wrong. They spend all their energy figuring out where to place orders after the number drops, while the smart money is already positioning in the 30 minutes before the release. I've been trading NFP days for 2 decades, and I can tell you with absolute certainty, the highest probability setups often occur in the pre-news compression phase, not in the chaotic aftermath. Today, I'm going to show you exactly how I'm trading both sides of this event. We've got the NFP forecast at 88,000, unemployment expected at 4.2%, and average hourly earnings projected at 0.3% month-over-month. The market is pricing a 54.8% probability of a September Fed rate hike, and this single data point could shift that number dramatically. I'm walking you through 2 pre-NFP setups, 3 post-data strategies, and the exact risk management protocol I use on high-impact days. My bias on pound sterling to US dollar is neutral to bullish heading into the NFP, but I'm not picking a directional side until I see the print. The pair is trading at 1.3458, holding above the 50-day, 100-day, and 200-day simple moving averages clustered near 1.3365. The RSI sits at 56.7. Still above the neutral 50 line, suggesting constructive momentum that's not yet overextended. The invalidation level for my bullish thesis is a daily close below 1.3365. That would tell me the structural support has failed and we are heading toward 1.3316 or lower. But here's the thing. With NFP expected at 88,000, almost double June's 57,000 print, the market has already priced in a recovery. The question isn't whether the number beats or misses, it's by how much, and what that means for the Fed's September decision. Pre-NFP setup number 1. Tier range-bound SEL. Let me give you my first pre-NFP setup, and this is one I've refined over years of trading these events. In the 30 to 45 minutes before the NFP release, the market typically enters a compression phase. Volatility collapses, spreads widen, and price action becomes choppy as liquidity providers pull their orders. This is where I look for what I call the range-bound scalp. Here's the setup. I'm watching pound sterling to US dollar trade within a tight range between 1.3440 and 1.3470 in the hour before the release. The strategy is simple. I sell the top of the range and buy the bottom, with very tight stops. Entry on the short side is at 1.3470 with a stop at 1.3485 and a target at 1.3450. Entry on the long side is at 1.3440 with a stop at 1.3425 and a target at 1.3460. The risk-reward ratio is roughly 1.3 to 1, which isn't spectacular, but the win rate on this setup during pre-NFP compression is surprisingly high. What stands out to me is the institutional behavior during this window. Market makers are deliberately suppressing volatility to avoid getting caught on the wrong side of the news. They're not interested in big moves. They're interested in collecting premium from retail traders who are placing wild bets. I've seen this exact pattern play out on dozens of NFP days. The range holds until the release, and then all hell breaks loose. Pre-NFP setup number 2. The straddle SDRATGY now for my second pre-NFP setup, and this is the one that separates professional traders from amateurs. I call it the straddle strategy, and it's designed to capture the inevitable volatility explosion that follows the NFP print. Here's how it works. Approximately 15 minutes before the release, I placed 2 pending orders simultaneously. The first is a buy stop above the recent range high at 1.3480, with a stop loss at 1.3450 and a target at 1.3520. The second is a sell stop below the recent range low at 1.3420, with a stop loss at 1.3450 and a target at 1.3380. Whichever order gets triggered first, I cancel the other. The beauty of this setup is that it doesn't require me to predict the NFP outcome. It simply requires me to acknowledge that a significant move is coming. I remember one NFP back in early 2023 where this exact strategy caught a 120 pip move in under 10 minutes. The market was compressed in a 20 pip range before the release, and when the number dropped, it exploded through both sides of the range, before settling on a direction. The straddle captured the initial breakout, and I was able to trail my stop and ride the momentum. Here's a personal insight for you. In my 20 years of trading, I've learned that the first 5 minutes after an NFP print are pure chaos. The algorithms go haywire, liquidity vanishes, and prices can spike in both directions before finding equilibrium. That's why I use wider stops on the straddle. I'm giving the market room to breathe while still capturing the directional move. NFP scenarios. What TOEXPECT? Now let me break down the 3 NFP scenarios and what they mean for pound sterling to US dollar. The consensus forecast is 88,000 new jobs, with estimates ranging from 50,000 to 140,000. Unemployment is expected at 4.2%, though some analysts see a risk of ticking up to 4.3%. Average hourly earnings are forecast at 0.3% month-over-month and 3.3 to 3.5% year-over-year. Scenario 1, hot NFP, above 100,000. If we get a print above 100,000 with strong wage growth, the market will interpret this as confirmation that the Fed can proceed with a September rate hike. The dollar would likely strengthen, and pound sterling to US dollar could drop toward 1.3400 or even 1.3365. The probability of a September hike, currently at 54.8%, could jump above 70%. Scenario 2, cold NFP, below 70,000. If we get a print below 70,000, especially if accompanied by a rise in unemployment to 4.3%, the market will price out the September hike. The dollar would sell off, and pound sterling to US dollar could rally toward 1.3500 or 1.3523. This would validate the narrative that June's 57,000 print wasn't an anomaly but the beginning of a broader slowdown. Scenario 3, inline NFP, 70,000 to 100,000. If the print comes in around the 88,000 consensus, the market reaction will be more muted. We'll see a knee-jerk move in both directions, but the overall trend will likely resume within the current range. This is where the straddle strategy really shines. We capture the initial volatility without committing to a directional bias. Post-NFP scalping setup number 1. Breakout above RSI. Once the NFP dust settles, and I mean after the first 15 minutes of chaos, I'm looking for directional confirmation. My first post-NFP scalping setup is a breakout above resistance. If we get a weak NFP print that triggers dollar selling, I'm watching for a clean break above 1.3500. My entry trigger is a momentum candle close above this level with confirmation from RSI acceleration. My target is 1.3523, which aligns with the descending trendline resistance from the 1.3653 high, and a secondary target at 1.3554. My stop loss sits at 1.3470. The risk-reward ratio is approximately 1.7 to 1. The invalidation level for this setup is a rejection candle back below 1.3500 within the first few minutes. If the market can't hold the breakout, I'm out. Post-NFP scalping setup number 2. Breakdown below SUP priority. My second post-NFP scalping setup is the mirror image, a breakdown below support. If we get a hot NFP print that strengthens the dollar, I'm watching for a clean breach below 1.3400. My entry trigger is a momentum candle close below this level. My target is 1.3365, which is the 50-100 200-day SMA mid-year, and a secondary target at 1.3316. My stop loss is at 1.3425. The risk-reward ratio is approximately 1.7 to 1. The invalidation level is a quick recovery back above 1.3400. If the market rejects the breakdown, I'll look for a reversal trade back toward the upside. Post-NFP swing trading STAG. This is where I'm putting the bulk of my risk, the post-NFP swing trade. I'm looking for a move that develops over the next 2 to 3 days, not just the next 2 hours. Bullish swing setup. If we get a cold NFP print that triggers a sell-off in the dollar, I'm looking to buy pullbacks toward the 1.3400 to 1.3418 support zone. My entry will be on a bounce from this level with bullish confirmation. My target is 1.3523, with a secondary target at 1.3554. My stop loss is at 1.3360. The risk-reward ratio is approximately 2 to 1. Bearish swing setup. If we get a hot NFP print that strengthens the dollar, I'm looking to short rallies toward the 1.3500 to 1.3523 resistance zone. My entry will be on a rejection from this level with bearish confirmation. My target is 1.3365, with a secondary target at 1.3316. My stop loss is at 1.3554. The risk-reward ratio is approximately 2 to 1. Here's the key insight that most traders miss. The real trend often doesn't establish itself until the second hour after the NFP release. The initial move is driven by algorithms and retail panic. The second move is driven by institutional positioning. That's why I'm scaling into the swing trade gradually rather than going all in on the first move. Let me take a moment to talk about risk management because this is absolutely critical on NFP day. I'm reducing my normal position size by at least 50% across all setups. The total exposure across all pre-NFP and post-NFP trades never exceeds 2% of my account. Here's my personal rule for NFP day. I never place a pre-NFP trade that risks more than 0.5% of my account. The straddle strategy uses 0.5% per side, and the range-bound scalp uses 0.3%. The post-NFP trades are sized at 0.5 to 0.7% each. This conservative approach has saved me more times than I can count. I remember one NFP back in 2018 where the market did a complete 180-degree reversal in under 10 minutes. The initial move was 80 pips in one direction, and then it reversed 120 pips in the opposite direction. Traders who were over-leveraged got wiped out. That's why I'm using wider stops on the straddle and tighter stops on the scalps. The key is to respect the invalidation levels. If the market breaks my levels decisively, I'm out. So here's my bottom line for pound sterling to US dollar heading into the NFP release. The forecast is 88,000 new jobs, unemployment at 4.2%, and average hourly earnings at 0.3% month over month. The market is pricing a 54.8% probability of a September Fed rate hike, and this single data point could shift that number dramatically. My pre-NFP strategy is simple. I'm running the range-bound scalp in the 30 minutes before the release, and I have the straddle strategy ready to capture the initial volatility explosion. Post-NFP, I'm watching for a breakout above 1.3500 or a breakdown below 1.3400, with swing trades positioned for the 2 to 3 day move. The levels I'm most focused on are 1.3500 resistance and 1.3400 support. A decisive break in either direction is going to tell us the next major directional move. I want to hear from you in the comments. What's your NFP forecast? Drop your number below and let's see who gets closest. And if you're trading this setup, let me know which strategy you're using. Don't forget to hit that subscribe button and turn on notifications so you don't miss my post-NFP breakdown. I'll be going live in the next couple of days with a market wrap. This is Trade Meridian Decoded Channel signing off. Stay patient, stay disciplined, and I'll see you in the next breakdown.